Well, good afternoon then, folks, and just an update from us as we head into another week of trading, another month of trading, another quarter. It's into the second half of 2023. So, a couple of things to go over to begin with to start the week. Not the busiest of weeks in terms of the economic calendar. Once we get around to Friday, there's a bit out of the US, as you can see. But before that, obviously pretty positive handover from last week. You can see stocks rallying across the board. You can see the S&P, you can see the Dow Jones, the Nasdaq and the Russell all posting a extremely positive end to the week. Couple that with the DAX, the FTSE and the Nikkei all pushing higher into the close last week. You can see the US dollar continues to strengthen. Maybe not so much on Friday, but over the course of last week, you can see Aussie Kiwi lower, you can see Euro Cable lower, you can see dollar Swiss pretty sideways, but dollar yen continues higher, looks primed to make another test of that 145 round number. And you can see dollar CAD had a bit of upside across the course of Monday, Tuesday and Wednesday. So pretty positive week in terms of the dollar, pretty positive week in terms of US stocks. Certainly, you have to put that somewhat down to the fact we had that positive GDP print from the US last Thursday. But into this week then, out of the US, we do have the ISM manufacturing PMI this week, which is supposed to be negative, supposed to be below 50. Keep an eye on this consensus to see where it comes in. But the main focus of attention this week in terms of the US will be the minutes, and then on to Friday in terms of the labour market figures. Now the minutes, we have to look back towards the last meeting, the last interest rate decision from the Fed, which did not yield any interest rate hikes. Right, there was suggestions from them, and they did imply that there was going to be 50 basis points worth of hikes into year end this year and no rate cuts. So that was slightly hawkish compared to what markets were anticipating. Potentially 25 basis points and potentially even a cut later on this year. That was poured cold water on by the Fed at their last meeting, and now we'll have to see these minutes to see the kind of minutes of the meeting as to whether they were unanimous in that decision or whether there was some dissenters. Now the board did, kind of in terms of the dot plot, did suggest that was going to happen, but in terms of the minutes, do they relay a little bit of pushback from some members on Wednesday, or do they reiterate that hawkish stance that we are likely to see interest rate hikes continue, maybe even potential for interest rate hikes to continue further? So can go both ways, that minutes on Wednesday, and then that leads us into NFP on Friday. Right, we also got Canadian employment on Friday. Obviously it's the second month in it's the second month. Every second month they do have these figures at the same time. That Canadian employment rate is supposed to tick up, something we will look at on Friday, as the central bank probably going to go on more of a pause with some negative inflation figures out last week. Couple that with unemployment rate rising does not really make a situation where they will continue to hike interest rates after being on a pause. But NFP then on Friday, you're expecting 225 worth of jobs to be added, so lower than the previous month. We have had some beats to the upside in terms of NFP on Friday, but the unemployment rate ticks down to 3.6 in terms of market consensus. So that will be obviously more jobs added, more roles being filled. And that is a situation that is likely to keep inflation pressured. So if the unemployment rate rises, in terms of what that means, is probably likely to be negative for the dollar. What that means for stocks is a little bit tricky. I mean, you can read into it the fact that the unemployment rate is rising, so they're going to stop raising interest rates, or look at stopping raising interest rates. That can be a situation where stocks rally. So we'll have to cross that bridge when it comes to it on Friday. We'll need to let markets kick into gear and allow them to trade over the course of the week. But we do have NFP to keep an eye on Friday. Those minutes will probably give us more of an indication as to what to expect on Friday, how the Fed think going forward. So I'm not going to make too much decisions or jump to too many conclusions on Monday of this week. Once we get those minutes on Wednesday, we can decide on Thursday as to how we want to trade NFP. But we will update on that as we go on through the week. Apart from that, we do have the RBA on Tuesday. Now markets do anticipate them to hike interest rates by a further 25 basis points. Now the monthly CPI indicator did pull back to 5.6% last week was a miss on consensus. Now, with that being, or with CPI being a quarterly figure, that quarterly figure in Australia, that monthly figure then does come more into focus in today's day and age. So yes, we're expecting a 25 basis point hike, but they have hiked interest rates unexpectedly 2 meetings in a row. Now they are looking to hike it expectedly. With inflation continuing to cool down, do they suggest that is then going to be them done and they are going to go back to kind of being data dependent and there's no decision made on interest rate hikes going forward? That is likely to be somewhat negative for the Australian dollar, and it's something we can keep an eye on into tomorrow morning, which is obviously tomorrow morning, which is 5:30 a.m. UK time. In terms of how to trade, personally, I'll probably look towards them giving across the kind of dovish hike, if that makes sense, suggesting that it is not clear cut to hike interest rates at the next meeting. At their previous meeting, they did suggest that it was undecided as to whether they would hike. We then come forward to this one. They are now expected to hike again. Probably likely to see some pushback on hikes going forward, especially when you couple that with the fact that the monthly CPI indicator from last week did come in below consensus. So there things to keep an eye on over the course of this week. We've got NFP labour market figures on Friday out of the US. We do have the minutes Wednesday evening, and we do have the RBA on Tuesday morning, which is tonight into tomorrow morning. So a few things worth keeping an eye on, a few things that we can look to take some or generate some trading opportunities off. Apart from that, not the busiest week in the economic calendar this week. We'll jump into our charts, jump into our cross asset correlations, and we'll see how that plays out over the course of this week.